BlackRock, which is going to get approved. It's just going to get approved. And it's going to be the only one that gets approved. And maybe after they collect 20, 30 billion, then others will get approved, but they're going to get approved first. Guess who they're working with? Coinbase. And that to me says so much that, one, this is coming, right? There's 755 for 756. I'm staking, the stake in the ground. This is not going to be the second denial for them. Too much for them to lose to even throw their hat in the ring. They could have just said, y'all have fun. It's an index on money laundering. That's what Larry said, 5 years ago, 6 years ago. So could have just stuck with that.
Crypto asset manager Grayscale Investments recently scored a big win in its battle against the United States Securities and Exchange Commission. In an ongoing effort to convert its Grayscale Bitcoin Trust, GBTC, into a Bitcoin exchange-traded fund, ETF, the U.S. Appeals Court judge accepted Grayscale's argument that the SEC's rejection of its recent ETF application was unfair. The SEC had alleged that the GBTC didn't have enough safe practices and fraud protection in place. Judge Naomi Rao gave the green light to Grayscale's request for a second review. Previously, Rao said that the SEC did not offer any explanation as to why Grayscale was in the wrong. However, the victory doesn't automatically mean Grayscale's Bitcoin ETF is a done deal. There's still more to come. The SEC has chosen to postpone delivering a decision on 6 applications for spot Bitcoin ETFs in the United States. The commission has opted to extend its review period by an additional 45 days, pushing the eventual decision back until October. Shortly after the news broke, the SEC also put BlackRock, the biggest asset manager in the world, in the same delayed decision boat. Mark Yusko explores the context of the SEC regulation as regards the ETFs and the crypto space in general. He also talks about the GBTC and the price impact following the court ruling news. Let us now get more details from the video below. Make sure to hit that like button, subscribe, and drop your comments below.
You want to regulate by enforcement? Okay. Not really a good way to run an agency. But we've had other agencies do it. We've had the FDA do it for a while. We've had the a couple other I'm blanking on, but we've seen it, right? We've seen very political people do very political things. The problem is if you're regulating a law or a rule and someone doesn't comply with it, you're on pretty solid ground, right?
Yeah.
If you regulate air, we were going to pass this rule, so you should have known we were going to pass this rule, and therefore you violated it. That's kind of what they did with BlockFi and Voyager and those guys. They're like, well, you violated this law, but you didn't say it was a law. You actually said the opposite. You said they weren't securities. Well, but you should have known we were going to change our mind. Oh my God, really? Okay, so that seems destined for failure, which we've seen number of failures. But what the SEC did here, which is just, and they're just getting smacked every which way from Sunday. If you basically take a bad position against an established law, a judge, unless you can handpick the judge, and like we see in billions, if you can pay them off and do it, unless you can do that, you're in trouble, because a good, honest, independent judge is going to do their job. And they're going to say, no. And we saw that in the Ripple case. We saw it in this case. We saw it in the Uniswap case. So thankfully, we got some good, honest judges, which they do still exist. But I still believe, right, that the bigger powers that are controlling this particular person who's on this enforcement kick, I still think he's kind of the pawn, the tool, right? He was installed into this position and he's like, okay, now I got to go do these things that they're telling me to do, which is okay. And there's probably some of his own personal stuff in there too. But ultimately, I don't think those powers that be are done fighting. And to your, I think your insight on custody is really, really important, because in the early days, Jay Clayton would get up there on the stage, and he and I actually did a panel on this together, and he would say, it's about market manipulation. We can't approve this because these markets are manipulated. And I was like, wow, you mean more manipulated than the penny stocks and the low float stocks? Like, I don't know if you've been following this VinFast EV company. Oh my God. This is crazy.
In a surprising twist following the U.S. SEC's announcement of delays, Bitwise has submitted a request to retract its application for its Bitcoin and Ether market cap weight strategy ETF. This application was originally submitted to the SEC on August 3. It seems that Bitwise is taking a step back to reconsider its approach, despite the brief positive market sentiment that followed Grayscale's recent SEC win. Mark Yusko now talks on the price impact of the GBTC and where he sees it at next. Let us join him in his analysis.
We've seen this movie before. We know exactly how it goes. GBTC, right? Big winners this week. The last run, when we went from 10,000 to 60,000 the first time, was all GBTC, right? GBTC got to $20 billion. And the reason the price went up so much is what people forget, the vast majority of Bitcoin is either not movable, right? It's in a multi-sig and there's some problem or whatever, lost or stolen, hodler, I'm not selling for anything, right? And so it's round numbers. Like this is one of those 85% of all statistics are made up on the spot. I'm going to argue 80-ish% is that. And so 20% is kind of the free float. So back in the last cycle, the market cap was a couple $100 billion. So if a couple $100 billion, 10, 20% of that is $40 billion. If you get $10 billion of flow on a $40 billion free float, price is going to go ballistic. And it did. And remember, it was fast. We went from 10 to 60 fast. And then Elon came out with his tweet and it went down and then it recovered back up to 69 or whatever. And that was the end on the day of the futures. So this time, and I give all credit to Eric, who we were going to have join us today, but Eric Balchunas is a great analyst and he did the math, right? He tracks the money that's in the kind of RIA and the people who use mutual funds and ETFs. And there's about $30 trillion. Okay. It's a lot of money. So when the ETF is approved, money's coming in, right? Right now, UBS can't do it. Merrill Lynch can't do it. All of these big RIAs can't do it. As soon as that ETF's approved, bang, they'll all have to ascend. So let's say 0.1%. Okay. 0.1%, $30 billion. 30 billion. So today, market cap's around $500 billion. 20% of that's 100 billion. 30 on 100, that's a similar amount, 10 versus 40. I think we go pretty parabolic. Now, we don't have as much leverage this time, so it probably doesn't do a 5x, but a 3x, not even a hard move, but that's 0.1%. If 1%, right? My hashtag get off zero, if you go from 0 to 1%, which is not a lot. And had you done that 5 years ago, your portfolio would have compounded at 200 basis points better. So people are going to see that math, and Barry and others are going to put that out there. 1%, that's 300 billion. 300 billion on 100 billion of free float. Katie bar the door, baby. Katie bar the door.
In a development on Capitol Hill, U.S. Congressman Warren Davidson, representing Ohio, once again called for the dismissal of SEC Chair Gary Gensler. This followed the court ruling that favored Grayscale, which Davidson believes adds weight to the argument that Gensler's actions at the SEC are inconsistent and unreasonable. Grayscale's victory marked the second legal setback for Gensler in 2 months. In addition, Vivek Ramaswamy, a Republican candidate in the U.S. presidential race recognized for his pro-crypto stance, endorsed the judicial decision that favored Grayscale. He perceives this triumph as a pivotal moment for the evolution of the United States Web3 sector. Ramaswamy criticized what he sees as an overextension of regulatory authority by government entities. He contended that the court ruling could catalyze the progress of Bitcoin and blockchain in the U.S. Furthermore, Ramaswamy committed to thoroughly assessing federal regulations, ensuring their alignment with the standards established by the Supreme Court, with the overarching goal of fostering innovation within the nation. According to an analysis by Eric Balchunas and James Seifert, esteemed ETF experts at Bloomberg, the prospects of the SEC approving a Bitcoin spot ETF have brightened in the wake of Grayscale's legal victory. This week, they disclosed that the chances of approval in 2023 have increased to 75%, a notable upswing from the prior estimate of 65%. Intriguingly, they also anticipate a highly favorable 95% likelihood of the SEC endorsing the ETF in 2024. On August 28, the SEC initiated legal proceedings against Impact Theory, a Los Angeles-headquartered media firm, over its participation in what the regulatory body has characterized as an unregistered NFT offering. This marked the SEC's first enforcement within the NFT scene. Remarkably, Impact Theory secured approximately $30 million in funding from a wide-ranging array of investors throughout the U.S. through the NFT project. The SEC implemented new regulations targeting the private funds industry on August 30, but industry leaders believe they shouldn't disrupt crypto companies. These rules primarily affect private equity, hedge funds, and some venture capital funds. Meanwhile, Ripple took a firm stance against the SEC's claim that XRP lacks internet value and is merely computer code. This assertion, formally stated in a court submission on September 1, aimed to emphasize XRP's unique position in the crypto scene. In contradiction to the regulator's interpretation, Ripple stressed that the recent ruling, which stated that XRP is not a security, did not declare the asset as mere computer code. As cryptocurrency, NFTs, and Web3 in general gain more rapid popularity, it is not surprising that regulations would become tighter, but most analysts and investors are calling for more transparency in the regulatory process and not the absence of it. What do you think of Mark Yusko's view on the subject discussed? Let us know in the comment section below. Don't forget to give us a like, subscribe, and turn on post notifications. Thanks for watching.